Good morning, and thank you for being here for the Hedge Invest Newman Credit Fund update for the month of March. The month of March was very volatile in the markets, and that offered great opportunity for our strategy. We were up around 50 basis points, and we managed to crystallize a lot of the profits we had on some of the shorts and reposition the book quite long into the end of the month, especially on financials, which were exceedingly destroyed in the markets in a gut reaction to what happened to Credit Suisse. Credit Suisse UBS were a great opportunity for us. We managed to go long Credit Suisse senior bonds at the holdco level just a few days before the monumental weekend that saw the merger between Credit Suisse and UBS. And then on Monday morning, we entered into a long position of UBS stock, which was trading below the 15 Swiss franc, which frankly didn't make any sense given that this was what we called a bailout acquisition, a BOA, which is probably the best kind of acquisition we've seen in the financial system, which is also the reason why we've been relatively constructive in what's happening around the financial system, because this is not Bear Stearns, and there's not been Bear Stearns for the last few months. What we've been witnessing, especially with UBS Credit Suisse, is a deja vu of what happened between Intesa and Veneto Banca, or before that, Banco Sabadell and Banco Popular in Spain. So basically there is a larger bank which is effectively being bailed out and fully subsidized to acquire a company, a smaller bank, which has been failing, but under and within the supervision and regulatory framework which has been established since 2009. So bottom line, banks are not the problem, definitely not in Europe. And US is slightly different when it comes down to regional banks, smaller banks, although even then we've seen plenty of overreaction. The real question mark is what's going to happen with the rest of the economy. So in a kind of perverse way, banks seems to be a relatively safe haven, especially when it comes down to national champions and European names. But at the same time, obviously, there is plenty of question marks with respect to the overall macro picture. The first question, which is going to drive our asset allocation going forward, is the impact on growth. We do expect a softening on growth. And then secondly is the lag effect of the monetary policy associated with that. And we think there is a lot more to come from that point of view. And more importantly, there will be a function of whether QT will be implemented or not. We've seen it with the European central banks that it seems to be going ahead, similarly with the Fed, and then the real question mark will be Bank of Japan and Bank of China, which at the moment has been pumping enormous amount of liquidity in the market. So that's the second question. And then thirdly, obviously, we need to see whether there are other big risks concentrated. We've seen central banks suffering during the gilts crisis in November. We've seen now with small regional banks when it comes down to treasury holding, question mark, how about asset management, how about life insurance companies? And there we do think there's going to be a little bit more problems coming up. So overall, we remain very cautious, very careful. We like some of the name in the financial sector where we hate others. We like banks, we dislike insurance, and we dislike asset managers. We also think there's going to be plenty of special situations and opportunities, as we've seen during the before and after the Credit Suisse UBS weekend merger. There's going to be plenty of overreaction and dislocation. So as always, it's going to be paramount the credit and equity selection based on fundamental work, but at the same time, there's going to be plenty of volatility and opportunity. Thank you.